The market is sending a powerful message, volatility is collapsing, and fundamentals are winning. The VIX, Wall Street's fear gauge, just fell below 15 for the first time since February. Bond volatility is at a low. Credit spreads are tight, and according to Mandy Hsu, head of derivatives, market intelligence, this isn't about complacency, it's about macro strength. Earnings have consistently surprised to the upside, inflation is easing, and the economy still resilient. But here's the kicker. Lee of Fundstrat just doubled down. In his words, the VIX is confirming the soft landing. He's been one of the few bold enough to challenge the crowd and call this rally what it is. Real, durable, and based on improving fundamentals, not hype. Lee sees the current drop in volatility as a green light, not a red flag. And he argues that unless there's a sudden macro shock, this market could continue grinding higher. Why does this matter? Because in a market where most investors are still underweight risk and waiting for the next shoe to drop, the pain trade is up. Low realized volatility, combined with a rising volatility risk premium, tells us something critical. Options traders aren't asleep, they're simply acknowledging that momentum is now being driven by a robust economy and policy tailwinds. With the Fed likely to cut because inflation is softening, not because growth is faltering, that's a rare bullish setup. So in this video, we're diving into 3 stocks that are not just surviving, but thriving in this low volatility, strong macro environment. These aren't defensive plays, they're conviction picks aligned with the bullish thesis that this market's strength is just getting started. First on the list is Broadcom Inc., ticker symbol AVGO, a company that's rapidly becoming one of the most critical players in the AI infrastructure race. While names like Nvidia often dominate the headlines, Broadcom is building a powerful niche, supplying the high-bandwidth, highly scalable networking chips that hyperscalers like Google, Meta, and Microsoft desperately need to bring generative AI to life at scale. At the heart of Broadcom's AI push is the Tomahawk Ultra, a next-generation Ethernet switch chip that delivers an unmatched 102.4 terabits per second of bandwidth. That kind of performance isn't just a spec sheet brag, it's what allows massive data centers to move AI workloads between thousands of servers with near zero latency. And here's the strategic edge. While Nvidia's NVLink excels in GPU-to-GPU communication within a rack, Broadcom's Tomahawk Ultra scales across data centers, supporting the distributed AI workloads that power today's large language models. Broadcom's bet is paying off. After a short-term slowdown in 2023 due to non-AI product softness and a one-time tax hit, the company came roaring back with nearly 44% revenue growth in 2024. Its AI-related products are surging, and its infrastructure software segment just posted triple-digit growth. In fact, analysts now believe AI chip demand could push Broadcom's AI revenue share to 40% by 2026. That's a game-changing shift for a company that already counts Apple and Samsung as key clients. With hyperscalers projected to spend over $320 billion on AI and data center infrastructure by the end of 2025, Broadcom is in prime position to capture a significant slice. And in a low volatility market, where investors are chasing durable growth stories tied to real demand, Broadcom's role in AI networking makes it one of the most compelling picks in tech today. As AI scales up from the lab to the real world, Broadcom is helping build the roads and getting paid every mile along the way. Next up is Arista Networks Inc., ticker symbol ANET, a company at the very center of the AI infrastructure revolution, quietly powering the digital highways that AI needs to thrive. While most investors are chasing flashy AI stocks, Arista is busy building the high-performance networks that actually make AI possible, and the numbers prove it. The company just posted over $2 billion in quarterly revenue, with operating margins nearing 48%, an extraordinary feat for any hardware company, let alone one scaling this fast. What sets Arista apart is its focus on back-end Ethernet connectivity, a critical piece of the AI puzzle. As training large AI models demands ultra-fast, low-latency connections across massive clusters of GPUs, Arista's Etherlink product line has emerged as a go-to solution. With congestion management, telemetry, and AI-specific load balancing baked into its software-defined architecture, Arista offers a solution that's both powerful and practical. And that's exactly what enterprises need. AI-ready networks they can deploy quickly and scale efficiently. Arista isn't stopping at hyperscale data centers. The company is making major moves into enterprise campus networking and high-performance routing, extending its software-first design into environments long dominated by legacy players like Cisco and Juniper. One recent win even came from a U.S. government agency, a major milestone as Arista breaks into federal markets. And with customers already deploying their infrastructure to support up to 100,000 AI accelerators, Arista expects to generate over $1.5 billion in AI-related networking revenue this year alone. Even amid tariff risk and increased competition from NVIDIA's bundled networking, Arista is executing with surgical precision. It holds over $8 billion in cash, no debt, and just authorized a new $1.5 billion buyback. Clear signals of confidence from leadership. With gross margins above 64% and expanding deferred revenue, Arista's model is built not just for growth, but for resilience. In a world where AI adoption is skyrocketing, Arista doesn't need to build the AI, it just needs to keep building the roads that deliver it. And that might be one of the smartest ways to play the infrastructure side of the AI megatrend. Now let's talk about Palantir Technologies Inc., ticker symbol PLTR, a company that's quietly transforming from a government contractor into one of the most powerful enablers of enterprise AI adoption. While most firms are still figuring out how to make AI practical at scale, Palantir has already cracked the code with its platform AIP, short for Artificial Intelligence Platform. And here's the kicker. Over 915 organizations have completed AIP bootcamps, where companies prototype real, deployable AI solutions in days, not months. That kind of speed is rare, and exactly what legacy software giants can't offer. Palantir's Q1 numbers were a major turning point. Revenue surged 39% year-over-year to $884 million, and U.S. commercial revenue grew an astonishing 71%. The company's commercial business is now at a $1 billion run rate, and CEO Alex Karp isn't slowing down. In fact, management raised full-year guidance just one quarter in, projecting up to $3.9 billion in 2025 revenue, a clear sign they're confident in continued momentum. And why shouldn't they be? Their flagship platform AIP is gaining rapid traction because it solves one of AI's biggest problems: how to get real results without needing an army of engineers. Palantir is also scoring massive wins with household names like Walgreens, which deployed AIP across 4,000 stores in under 8 months. That's unheard of in traditional enterprise IT. And yet, many Wall Street analysts still label the stock a hold, worried about valuation. But Palantir's growth profile, 83% Rule of 40 score, and 44% adjusted operating margins tell a very different story, one of operational leverage and early dominance in a trillion-dollar AI opportunity. Here's the bottom line. Palantir isn't just building software. It's building the infrastructure that helps America's biggest institutions and enterprises think, act, and operate with artificial intelligence. In a market where the winners will be those who scale fast and execute with precision, Palantir is already showing the playbook and rewriting it at the same time. The market may look calm on the surface, but beneath that low volatility lies a surge of innovation, and companies like Broadcom, Arista Networks, and Palantir are leading the charge. These aren't just tech names riding the AI wave. They're building the infrastructure that makes the entire ecosystem possible. From ultra-fast chips to intelligent networking to real-time AI deployment, they represent the backbone of tomorrow's economy. And while some investors are still waiting on the sidelines, the smart money is already moving in. If this truly is the beginning of a multi-year AI supercycle, these are the names you'll want to keep your eyes on. Thanks for watching. Don't forget to like, subscribe, and drop a comment with your favorite AI infrastructure stock. See you in the next one.